Let's move right on to Cloudflare. Another stock people have been really excited about, really hot stock. No doubt, if you look at the last year on this stock, it's an incredible path here. 412% up in the last year. Now down 5% after hours after an earnings report. We're going to take a look at it. The initial reaction was positive. Now it went to negative, and I guess it's going to be a pretty choppy trading session is what I meant to say in after hours. So we'll take a look at these earnings real quick. Take a peek-sies. Post a non-GAAP EPS line of negative 2 cents. Beats by 2 cents. 2. I held up 2, but I held up for some reason. I don't know why I held up my fingers at all, really, but I held up my pointer and my pinky. So I was really just saying rock on. And a GAAP EPS of negative 11 cents misses by 5 cents. Now, obviously not too impressed there in terms of that line. Nothing crazy. It's not a massive beat, but also not a massive miss. So I can't be too upset. It's just pretty neutral feeling in terms of that. The revenue line, pretty impressive though. 125.9 million, increased 50% year over year, but it's a beat by 7.57%. So pretty nice. Obviously, the first thing that sticks out to me there when I look at that is 125 million in terms of sales there. Got to look at the annualized amount. Obviously, we'll see that when they give the full year amount, but it obviously has a big point of valuation for me. Gross profit came in at 96.9 million. Pretty impressive there, really. That's a really good gross margin. 76.9% gross margin. It's quite impressive. Let's look at this. Again, I had to zoom in because it was too small. It's an unfortunate problem I have quite often in life. But we'll always get over it, okay? We're going to get over it. For some reason, their bullet points are, I don't know why they did it weird, but it's under the second line as opposed to the first. So, yeah. So for the full year, 2020 revenue came in at 431 million. Now, let's just be fair. It's a 50% growth year over year. I got to stop it there to take a look. 431 million in terms of total revenue for the year, trading at a market cap of 28 billion. Now, I don't think you need me to mention there. That's not necessarily the best valuation there. We're talking about 60 times that, nearly 60. Really, it is 60 times in terms of that. So one thing you gotta put into consideration. We're just talking about valuation as we flow. That's how the brain works. Okay, when I see something, it sticks out. Oh yeah. So let's get into some of the good stuff. Fourth quarter highlights. Obviously, we saw total revenue grew 50%. Gross profit was a pretty big highlight. Now, an operating loss came in at 24.7 million. Actually, not that bad, all things considered. $24 million. It's not awful. Again, they overall in terms of a revenue line put it up 124. So it's not an awful loss there. I can't lie. That's not beautiful. Net loss was 34 million. Again, not the end of the world. It's not beautiful, but that compares to 28.2 million in the fourth quarter of last year. My concern, obviously, is that this is a line that's going in the wrong way. So you see an increase of sales by 50% revenue, but you also see a gap. The net loss saw an increase as well by a $6 million number. It's in terms of percentage, we're really only talking about an additional 20%, roughly, which it's not beautiful. You don't want to see that. You don't want to, because you want to see that profitability line going towards positive numbers. You want to see an actual profit. So that's one thing you need to consider with this company too. I would have liked to see some growth there. Really, I really would have. For full year highlights, now one thing that is pretty important, 431 million in terms of sales, pretty important stuff. Net loss on the year came in at 119 million. So, it's more than a fourth of what they did in terms of revenue. That net loss line, not beautiful, and it compares to 105 million of the year prior. So they did increase on the full year in terms of that as well. they are going in the wrong direction, but the revenue is going higher. And that's what I kind of don't like about this market right now. Is at a state where stocks like this that don't have profitability and they're not headed in the right direction even, they're seeing a big boom. People are really into these things as far as future prospects. And we don't necessarily have quite fair value as you usually would see. So that's one thing to consider here. But overall, they increased revenue by a lot more than they did in terms of net loss. So you could see that as a positive if you want. For the outlook here, guidance, they're given first quarter total revenue of 130 to 131 million. Pretty nice there. Non-GAAP and loss to be $9 to $8 million, which I'm pretty sure represents for them right around 30 million, 25 million, something in terms of net loss, which again, not in the right direction. It's not in the right direction, but that's okay. For the full year, they're expecting total revenue of 589 to 593. That compares to 431 of this year. That's really good guidance for the next year. We're talking about another increase, really close to 40%. So pretty nice, and a net loss of 25 to 21 million. So it'll represent closely right around right around maybe I'd say 50 to 60 million dollars for them in terms of probably an actual net loss if you're looking at a GAAP perspective. So not horrific. That would in fact be a growth year over year. I mean, they would see some improvement there if that's what they're able to do. So we'll obviously take a look at that. It's pretty impressive if they can do that. We'll look at the balance sheet. Again, it's a net loss year, so it's important to look at the balance sheet of companies that are bringing in a net loss. I do get a full year-over-year comparison. I love when they do that. I love it. I love when these companies treat me right. You need to treat me right, and I'll treat you right. Tuck you into bed at night. $1.1 billion in total current assets compared to $689 of the year prior. Pretty solid improvement there. Most of it obviously in available for sale securities. So these securities they're trying to sell for cashish most likely. So probably they raised debt for that, I would assume, but we'll take a look. Total assets in general at 1.38 compares to 830 million. Good night. That's some good stuff there. So good growth overall. Now my concern obviously is going to be deficit. Let's see what's going on here. Total current liabilities at 141 million compares to 83 million. Quite a growth there, mostly in operating lease liabilities, accrued expenses. Ooh, total liabilities, look at this nonsense. 563 million compared to 104 million of the year before. Oh, gosh. That's quite the increase there. Not a shocker, though. It's kind of what I expected. We saw them grow assets by a little bit more than that even, but that's what I expected when you saw those marketable securities to sell. It was really a raise in terms of senior notes, as you saw, 380 million in terms of senior notes that they obviously brought on to bring in capital. But still, stockholder equity did rise, as we saw, 816 versus 725, around a $90 million growth there. So there's positivity to say here. Balance sheet's getting a little bit bigger. There's something to be said about that. Balance sheet's pretty big for a company of this stature. I can't lie to you. And that equity line is not that bad at all. It's pretty good actually. 1.3 billion on the balance sheet, but 800 million in equity. It's pretty impressive actually. Really nice stuff there for them. So as far as valuation, again, we mentioned this. $28 billion for this company I think is a little pricey. Even if next year they bring in 580 to 600 million even, I think it's still pricey valuation for where it's at right now. I think they've already priced in the growth on this stock. Now down 6.5%. Yikes, you hate to see it. But I think most of this has been priced in terms of this growth over the last year, 400%. I don't know what the future holds for this stock, whether it's this market's so impossible to determine. In a normal market, I believe it would deserve to stay stagnant for a while and not see much growth. Not necessarily go down, but probably stay stagnant. But who knows with things right now. we'll see what it looks like. Overall, not a bad earnings report by any means. So pretty decent earnings. Just overall, I think the stock's a little bit overbought, and I think that's why you're seeing this negative reaction after hours. That's what I got for you. Have a good day.